Hello traders, welcome to my channel, Triumph Trust FX channel. Today I just want to share with us a brief explanation of how I trade the Volatility Index 75. It's pretty good strategy, and if you are disciplined and you keep to it, it's going to make you profitable. So as you can see on my screen, I have three charts open up for Volatility 75. This is a 4-hour chart, this is a 1-hour chart, and this is the 15-minute chart. And I have a couple of indicators that I use here. On the 15-minute chart, I have the 200, I have the moving average 13 exponential moving average. And under here, I have the Traders Dynamic Index, the TDI. So on the TDI, I'm only using these two lines, the green and the red. Then on the 1-hour chart, I have the exponential moving average 13. I have an exponential moving average 7 and the TDI as well. Then okay, here I also have the supply and demand zone indicator on all the charts. On the 4-hour time frame is the same thing I have on the 1-hour chart is what I have here. The 13 exponential moving average, the 7 exponential moving average. So I just took this trade. I woke up and I opened my chart. I saw this move and I just took this trade and it's pretty going well. This is my first take profit. This is my second take profit. And if this zone is broken, which is this one, I have another take profit above the zone, as you can see it here. So if this zone is broken, the market will keep going up. So why I have the three charts is because I use the 1 hour and the 4 hour to do my analysis, and sometimes the 15 minutes, but mostly I use the 15 minutes to take my entry. So this is how it works. On the 4-hour time frame, yeah, so this is what I do. If a zone is created, maybe like this demand zone, and is retested, I'll prepare to take my entry. I will take my entry if number one, if when the zone is retested, either the 7 exponential moving average or the 13 exponential moving average enters into the zone. If it enters into the zone, I will wait for price to come out and close above the 2 of the moving averages. Then I will know that this market will move very far. It will go far. So as soon as that happens, I will go to the M15 time frame to ensure that price has also closed above the 2 moving averages. Then that is this 13 moving average. Then I'll take the trade. So this happened on, I can't see this clearly. I think this happened on the 14th of January 2021, on the 14th. So if you go, let's check that out on the 15 minutes time frame on the 14th of January 2020. I took this trade that day. So 14th of January here. So as price closed above the 13 moving average. So when I saw this trade, it was somewhere here. Price has gotten to this level. I took this trade here. So my first take profit was here, and the second was up above. So I came here to ensure that price is above the 13 moving average, and the trader dynamic index is also above the 50 level. The green is above the red, and they are above the 50 level. That is what I use this for. That is when I took the trade. And that was how the market moved up and continued up without looking back. So that is the first entry. I'll wait until this happens. So whatever applies here on the 4-hour chart is what also applies on the 15 minutes, on the 1 hour, sorry. Then the second aspect is if price comes to retest the zone, it created a high here before coming to retest the zone. If for any reason the 7 or the 13 exponential moving average is not, they don't enter the zone, I will wait to make sure that price closes above the swing high before the retest. So as soon as price closes above the swing high, I'll take an entry and buy. That is the second aspect of the setup. And I will ensure as price is closing above the swing high, the TDI is also above the 50 line, and the green is above the red. It's just as simple as that. I'm only using the 50 level. Just as simple as that. So the third aspect I look into the third analysis is when a high is broken on the higher time frame, 4 hour or 1 hour. Once this high is broken, I will ensure price, the TDI is above the 50 level and the green line above the red. Then I'll take an entry. Same goes to a sell. So let's scroll back. So we have here, price came back to retest the zone. None of the moving averages enter the zone. What will I do? I will mark out the swing high before the retest, which is this. As soon as price breaks above it, green line across above the red line, and both of them above the 50 level, I take a buy from here. There was also another retest here. Then I will wait for price to come and break above the swing high before the retest. Price didn't get there until it comes back again to do another retest. So I move my ship here and I'll wait for price to close above it. Price did not close above it here until here, this point. And green line above the red and both above the 50 level. I take my buy from here. Same thing here. After this retest, the moving average did not enter the zone, but I have to wait for price to close above this swing high before the retest. Then I take my buy. A retest happened here. Then moving average did not enter the zone. I wait for this high to be broken. I take a buy here. A retest happen here. I wait for price to close above this. I take my buy. Price did not close above that. So that is basically what I watch out for. A retest. Price close above this high. I'll take a buy. But this one price wasted a lot of time before finally breaking out here. So on this retest, I'll wait for price to break this level. And this is where it happened. Take a buy. Price retested here. I wait for price to break this level before I take a buy. So I do not have any demand supply zone currently to explain this sell, but it's just the opposite of the buy. Then another way I take trade is if this demand zone is formed, price I wait for price to come and retest it. Price did not retest and a new one form up above it. If it is on the lower time frame, I will take a buy once the new one is formed. But on the higher time frame, I will ensure a retest is done and price breaks above the swing high. So the same thing applies to the 1 hour time frame. When a high, this high being broken is another entry. I've explained that already. There was a supply zone here and it was taken out. So as soon as that is taken out, I will ensure the gray line is above the red. Then I'll take my entry. So this trade is almost as at my take profit one. So when a zone is breaking out, it's taken out, I usually wait for a retracement on the 50 minutes time frame. So this zone, if a zone was here, a zone was here. As soon as it is taken out, I'll ensure when price closes above this, so this high here, this was where price broke above it, above this high, the 1 hour high that was created. I wait for a retracement back to the 13 exponential moving average. Price closes above it, I take the entry. But I woke up to see that price has gotten here. So as you can see, my TP1 has been taken out. So immediately, sometimes I wait, but immediately I protect the remaining entries. In case price decide to come back down, I'll go with this. But for this, price will definitely get to this zone. So how do I arrange my take profit level? So most of the time, I fix my take profit on the last bullish candle before they drop from the zone. The last bullish candle, which is this. So after taking an entry here, I'll put my TP on the last bullish candle before this drop, which is here. Next one will be on the zone itself. and the final one will be above in case price breaks above that zone. All right, thank you for watching. So do subscribe to my YouTube channel and like this video. You can also share it. Thanks for watching.